Fact: 80% of property investors don't claim their building depreciation. Why? They are confused about the process. It is important to note that if you don't claim your depreciation entitlements, you lose them. It's as simple as that. Is it legal? Yes. Under current legislation, it is your legitimate right to claim these deductions. What is depreciation? If you purchase an asset for the sole purpose of earning a living, then under current legislation you are allowed to claim deductions against your taxable income. Why was it introduced? It was introduced in 1985 to help stimulate the economy, similar to the recently introduced stimulus package and the first homeowners grant. How can it assist me? If you purchase an investment property for $450,000 and the building component is $212,000, fixtures, fittings and white goods, etc. are $18,000, this equates to deductions of $230,000 over 40 years or $5,750 per year. Fixtures and fittings depreciate at a much higher percentage than the building and therefore escalate the first 5 to 7 years of the investment. This is referred to as maximizing depreciation. Example of an actual $450,000 house and land package with a bill cost of $230,000. Let the tenant and the ATO pay off your property. Yes, that's right. Use the rent from your tenant and your depreciation deductions to pay off your property sooner. In most cases, this will reduce the length of your loan by 7 to 10 years, saving you thousands in interest payments. I have an existing property. No problem. You can still have the property analysed as current legislation allows you to amend the past 2 years' tax returns. Therefore, there is no need for you to lose your precious property deductions. The property was not new when I purchased it. Again, no problem. All properties offer depreciation allowances. What if my property is a pre-1985 and there is no building allowance? Most pre-1985 properties will have a renovation or have been refurbished, which can be claimed. Excluding this, they'll all contain a planned component, fixtures, fittings and white goods, which are claimable. See example. Property with building component. Property with no building component, pre-1985. What if my property is pre-1985 and I have lived in it for 3 years? Tax depreciation on plant starts when you purchase the property, settlement date, although you can only claim the deductions when it becomes a rental property. Using the above example, when we remove the first 3 years, the available deductions begin in year 4 onwards. Property with no building component, pre-1985. Property with no building component, lived in for 3 years pre-1985. Australian Valuers would like to thank you for the opportunity of presenting this proposal for your consideration. www.australianvaluers.com.au